day all. Ira Epstein of Linn Associates with your financial market wrap-up for this Thursday, the 19th of December, 2019. And all I could say is, ho, 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 it is the Santa Claus rally. You know, it was just over a week ago I was on Fox TV, and you know I was bullish as can be, and everybody's talking, oh, you got to have some volatility plays on and so on. I'm going, nah, I think it's a one-sided market, and it's turned out to be that. It's pretty much played out that you got the USMCA deal. Looks like it's wrapped up in the House now. That'll go to the Senate, and it's just a rubber stamp when the Senate decides to take it on. The U.S.-Chinese trade deal, that's a done first phase, according to our Treasury Secretary. It's been translated. It's been put down on paper. Both sides have agreed. It just needs signing, and that'll be our New Year's gift from the sounds of things. If you take a look tomorrow, you're probably going to hear that the Bank of England is going to decide who is the next head to replace outgoing Mark Carney. That's going to be an important event. And the financial data that's been coming out, well, it's just not going to get grazed over in a big way right now. It's you're getting into the holiday mode. So I will be doing tomorrow my Friday wrap-ups of everything. However, I am going to take off come Sunday, and I will not be back to the following Saturday. So what are you going to miss me? Christmas Day, the day after. You understand, I don't miss much work. And for those of you that are my subscribers and get my written research and so on, I have every intent of still keeping you up. I might go back to a moderated schedule of one a day, but I'll at some point put out my morning update. It won't be at 5 in the morning. That's a guarantee, but everything's going to come out. So I like to keep up with the markets, as you know. Up another day in the energy. Even that gas was able to hold on today. Dollar down a little bit as the currency market's mixed. You're still feeling the pressure in the British pound of what does a real Brexit look like, and that's putting some pressure there. Gold and silver both up today, and that's a good sign. And of course, the U.S.-Chinese trade deal helps the copper. But as I said, this is about stock indices first, and as you can see, you're up 35 points this week. So I feel pretty good, having been on Fox last week and saying, I just think it's straight up. I only think I said 3 sentences because there was nothing more to really say. And the market's done what I was hoping it would. It certainly has been a heck of a bull run, and all things you must understand, you're going to get into 2020, and there is going to be a correction. If you don't think so, great. I believe there will be. How, when, what'll cause it? It just seems to come out of nowhere. So yes, you've got to use your caution, understand that volume is starting to fade in these markets, and you're moving up in thinner rotations and so on. That is normal. The market has a pattern of higher lows, higher highs. A warning sign that maybe it wants to stall a bit would be getting under 31.92. Where do we see the support in the market? Well, it's all the way back at 31.52, so that's 40 points lower. It's not a monster, but it would certainly not be a good sign to take that out and then take out the other low. On the other hand, the historics show that between Christmas and the very beginning of the year, the market has a tendency, a strong one, for the upside. Past performance has limitations. What about resistance? Well, you were over the upper Bollinger Band. Now remember, the key on a Bollinger Band, the thinking, is that the market will trade within the black bands, and I've got them here as dotted black bands or / bands for you to easily see. It will stay over or under them only 95% of the time. So they're going to stay with, well, only 5% of the time. I said that wrong, 95% within them. Now let's understand what that means. You can get over a band to push it out, then you pull back in, and just what you're doing here. You can do what I call run the band. If you run the band, it's often when the slow stochastic momentum oscillator has embedded. It has changed its character from being overbought or oversold to going flat, either over 80 or under 20, depending if it's bullish or bearish. This is the bullish one. And until that red line closes back under 80, my contention is that on breaks in this market, the pros keep showing up to buy the market. You have the same pattern in the NASDAQ. You're running the band. You got over it, then you move to the right-hand side, as you're still doing. That's running the band. It's a powerhouse. There's no other word I can use. Even the Dow, which has been the laggard, today both numbers got over 80 yesterday, and the day before. You're now embedded. The day before that, it was not. So it has joined the parade, and I wouldn't be surprised to see it get up to that upper Bollinger Band. The Russell, embedded reading, running that band. You've got all those there, and the VIX, of course, is just oversold. You've had a contra-trend bounce in the market, and you're not really in a trend here. You have a market that's got a higher high, a lower low, just sort of drifting in an oversold condition, not trying to embed. In the bond market, you have been running against that lower band, bouncing in an oversold, not with an embedded reading. So to see some profit taking here, not a surprise. Market should have a hard time staying under the band unless we had some crazy piece of news that came out of nowhere that scared traders in some manner. But if they got scared, they'd probably be a buyer and you'd see this market go up. Remember, safe havens, it's an inversion market on bonds and notes in the futures. Same thing happening here. You hit that number, you got your bounce. Not a change of trend. It's an oversold condition where the pros, I think, are taking some money off the table. Same in TLT. Oversold, not embedded, lower highs, lower lows, trend down, bias down. We then get to the dollar index. And the dollar index has been rallying since 96.29.5. It's finally gotten itself back up about 70 points from there. It's 96.95.5, got up to 97.06. And it's sort of stalling. I would expect that, all right? We're coming into the end of the year. I don't know that currency traders are going to get super aggressive one way or the other. We've got the break happening in the eurocurrency, but not a downtrend. The market had a nice run, and then it went into that reaction mode of lower highs, lower lows. I don't know if it's got the power or not to get to the 100-day average. It seems, I'm sorry, the 18-day in red. It's the 100 that the market seems enamored with for the moment, which is that green line. I don't see a play here because the swing line's down, the bias is up, and momentum has worked out of being overbought. In the British pound, what goes up comes down. You've gone instantly from 135, roughly 50, all the way back, 500 points down. So the euphoria that Boris Johnson brought with the market, as soon as he said he wants 1 year of a Brexit or they're leaving anyways, he took it all out of the market. Now we're going to see what the Bank of England wants to do. We've got to see first who the bank is going to choose, and I expect that tomorrow we will hear who the choice is. And then we have to see what kind of person that is. I already think I know who it's going to be. And the question is, will the bank go on an easing pattern or not? The interesting thing while I'm talking about easing and so on is in Sweden, their central bank went up in interest rates. They're now out of the negative territory. Is that the beginning of something that all of the European Union starts watching? Be interesting to keep up with that. In the Japanese yen, you finally got the correction where you've got the lower low, higher high. You've stepped out of this downtrend. So I see an evening up policy beginning to happen there. In Bitcoin, we got down to the first challenge of the lower Bollinger Band Tuesday. And that's where I think the pros, again, started lifting out of their shorts. You had a reversal yesterday, and you're back up. You're out of a trend. You got up high enough to take out that high, so now you got a lower low, higher high, and now I see spinning action in here. A lot of people are talking, where's this market going to go? Because next year, the way that the algorithms work, you cut the amount of Bitcoins that can be produced again. In the Brent versus WTI, you've been hanging around this 5.25 level for a long time. Don't know that it's going to come out of that right here. You're still in an uptrend here. And I read an interesting article today on Brent. And the question is, who is the swing producer now? And a lot of people don't think it's the Saudis. The Saudis can add production whenever they want. We know they can go up to 12 million barrels a day, and they're around 10 million, so we know that. But why would they need the money? They got their Saudi Aramco deal there. Do they really want to flood the market? So the question is, bringing supply and demand together with natural forces. In the WTI, our producers have to love this. Remember, we were losing oil rig count in this whole time frame here. Now with prices up and off the 55 back to the almost $61 range, I would think producers can go to banks and get some money and say, I can make money in this. Gasoline, holiday driving right ahead of us. I'll be hitting the road. And it's not that I'm driving the price higher, but just think of all of us that are going to do it. And from the looks of the weather, it's going to be very accommodating. I would assume gasoline demand, it's already been accounted for. That's in the price here, but it's probably going to continue for a bit. Can the market get up to the 172 level will be interesting, the upper Bollinger Band. Nat gas, as I've said, I think there's just so much supply that this market gets bounces in it, but the chart action, as long as it stays under this 18-day average of closes, I think it remains bearish. Want to remind you, if you haven't tried my market research, this is a perfect time to get onto my list, get a feel for it. And remember, you can view it on your iPhones, you can view it on an Android phone, you can see it in tablets, on your computer. We make it available in a whole series of ways if you've not tried it. I start off the mornings before the holiday period by recording at about 5:30 each morning to 6 o'clock. That's when I begin. And I'm recording a video where I'm not in it. I've got my headset on, I'm taking you through the markets, and I'm prepping you as a futures trader for it. I'm going to be adding in January a new video. It won't be a morning, it's going to be an after the market video that's going to include just ETF trades, preparing the traders for the next day of trading. Since that closes 3:15, it fits right in with my schedule easily. Some people only want my commentary. Well, if you try the trial, you see it anyways, and we do offer the commentary by itself at a very reduced price. So if you'd like to see all this, simply go to our website under free trials, do that. You can call my staff, they can get you set up, or you can click right here. If you're watching me on YouTube, it'll take you right there. I'm Ira Epstein, you have a good day, and I'll see you all tomorrow.